Hello. So today I want to talk about uh, fundamentals in general and how they will not affect your trading. Because I've seen most of the people yesterday, it was uh, Trump imposing tariffs on different nations. So I think everyone saw what happened. So this video is simply any kind of fundamental, like the fundamentals that you didn't, they were not on the economic calendar. I mean, the economical data, the inflation, the politics, natural disasters, or any kind of fundamental that you know about it. Once you trade it, I mean, once you just trade the price right and the price is on your direction, or you just analyze the price, there will be nothing that will, go wrong on your trading, because I've seen people talking about like, oh, I just, I was taken out by the stop losses. I don't know, the trade went away. This is because you are on the wrong direction of the market. So simply, these all fundamentals, they fall what we call the price action. So they do not go there and distort the chart. You need to understand that. And there's no manipulation about the fundamentals. You need to understand that. Every trader need to understand that. So which means if the fundamentals came out and you were any kind of news about the market came out and you were taken out by the trade, which means you are the one who was not correct. So today I want to show you how liquidity or these fundamentals follow liquidity, even if there's someone said anything there about the market, especially Trump, Jerome Powell, and any other person said anything about the market. Simply this will follow the liquidity, will flow with the liquidity and the direction of the market. So without wasting the time, let us talk about a few pairs. So for instance, this is USD card. This was the pair that um, I analyzed it first before what happened yesterday. And I think there's the video that I posted earlier. So once we observe the USD card before this movement to the downside direction, we see that we had a downside direction. We had bias. We This is bias, the bearish bias. So this is the bearish bias. As we can clearly see, price has closed below. We are trading the current price action. We do not trade the we are not trading the history. We are trading what is present. So for the buyers, generally we have the bearish bias. So our work is to identify the trend. That was last week. So which means we were focusing on the coming week, what will happen next. So as we observe the trend, we see that the trend we observe on daily, this is the trend. Price has closed below. So we'll look forward into any authenticated area of liquidity that is price has offered us. So before yesterday's movement, the authenticated area of liquidity, we had two authenticated area of liquidity. I think I'll be explaining it later on how we can react on two authenticated areas of liquidity if they are followed to each other. But at the meantime, we had the type 2 authenticated area of liquidity. So this is the type 2 authenticated area of liquidity, and my student understand about it. So the aim of any area of liquidity is to break the structure. So once the failure of structure break occurs, then price will have to look for more liquidities in order to break the structure in a good or proper way. That's the aim of finding the liquidities. So we had this area of liquidity, as you can clearly see, the type 2 area of liquidity. And before this movement to the upside direction, price reacted first. My students understand about it. Price reacted first. So we had the movement. Let me show you in small time. I'm sorry I didn't pay for the trading view. That's why there's a bit problem of me cutting the charts. So we can see here price reacting to this authenticated area of liquidity before and dropping to the downside. but we can clearly see that the liquidity failed to break below this structure. So by the time when the liquidity failed, it went higher to look for the other more liquidities. So we're expecting to observe price encounter another liquidity, area of liquidity, so that it can drop to the downside direction. So as we go back to the 4 hours time frame to look, do we have any authenticated area of liquidity? We can clearly see we have the type 3 authenticated area of liquidity. I was watching it live and I saw it this kind of setup, but it was already midnight, so I didn't trade. I don't trade during the midnight. So as this the type 3 authenticated area of liquidity, we understand we have two types of entry on the type 3 authenticated area of liquidity. We have the confirmational and the aggressive one. But price offered us the confirmational entry, which was on the 3-minute time frame. I mean the 1-minute time frame, 3-minute time frame, or both time frames, they were best to enter. So after price tapping our authenticated area of liquidity, our entry was somewhere here. So someone could have taken the entry from this spot or from this area, another area of liquidity, the one that hasn't been consumed by the market. So it's either here or here on whatever you would love to take the trade. But this is to show you that all these fundamentals will flow to the areas of liquidities and they will be moved by the liquidities. So if you missed the entry, you didn't take from this point, which means you would have taken from here or here and have a nice drop to the downside. So we can clearly see that this is the price where the market managed to close below. You can clearly see. Once we mark here, this is the price where market managed to close below the structure. So the liquidities of this high structure were enough to break to the downside structure. So this is how you take into consideration of liquidity. So this coming week, we are hoping that, or we are looking forward to see that the price closing below this structure to give us what now you call the formations. You know, people will be trading the formations and so on and so forth. So which means we have the shift in formation to help us change the direction of the market completely. So if the market this week closes below this structure, we'll be good to go. And this is how you analyze the market from a top to down. Let me go to another example, which is USD. Let us talk about USD. And we saw that for the last week, USD has been bullish. What we are trading the current price action. We don't want to trade the price action that is previous or the history. You need to understand that. So once we consider, we see that the last week price has been closing above these structures, which means we have bullish, and we need to go on the trends to observe, do we have any bullish trend? We saw that price closed above this high, which means this is an area of liquidity, but we need to observe the trend for the bullish setups. We need to observe the bullish setups. So we can clearly see we have the bullish setup there. I mean, the bullish area of liquidity and the trend is bullish. Same applies to the 4 hours time frame. The trend is bullish. So how do we enter on? So the next step is to observe the authenticated area of liquidity. So when we go to daily time frame, we can clearly see that we have, this is our authenticated area of liquidity. This one, I think my student understand about this area of liquidity. But from this authenticated area of liquidity, we know we have what we call the candle failure that has occurred inside authenticated area of liquidity. So you either trade the candle failure or you trade the candle failure inside an authenticated area of liquidity. You either trade this area of liquidity or trade the candle failure inside an authenticated area of liquidity. So that's it. Because the bias was bullish, we need to see the trend 4 hours or daily also bullish, or we need to have any bullish setup. That's it. Once you have considered that, then there's nothing else you need from that point. So which means now let's go to 4 hours. From 4 hours, once we consider our procedures of looking at the candle failure, we can clearly see that we have, yeah, the rejection at the that failure. Then someone would have refined to get the entry here. Remember that we have also another authenticated area of liquidity, which is right here. So if you consider this the type 3 authenticated area of liquidity, it's okay to consider that as your part of your entry. But you can clearly see this was the movement that occurred at the time of Trump giving us the speech about the tariffs. So let us see what happened on 1 hour. What we need to trade an authenticated area of liquidity, we trade either the aggressive or confirmation. It's up to you. If you trade both of them, it's okay. So we see what happened here. Price will always flow with the liquidity. So if you were taken out, we were taken out because you didn't follow the trend, or you entered, I mean the trend or the bias, or you entered on the long direction of the market. I mean, or you entered late into the market, but if you entered correct, everything will be flowing on your side. So which means from this structure here for our time frame, we can either go on the smallest time frame here to define and to look for the what we call the shift information for the shift information for the entries of this type 3. So the confirmation. So once we go on 1 minute time frame, we can clearly see after price tapping our entry, we are then shift information on 1 minute. This one, shift information. This is the confirmation or entry. Even if you missed this one, we had another one here down. We had another one here. We had a lot of entries, and that's how, maybe for those who are thinking okay about scalping. So you find most people thinking like, how do you do scalping? This is how you do scalping. You just consider everything from the buyer's trend, authenticated area of liquidity, entry. Now you enter on the lowest time frame by doing what we call the refinement on the smallest time frame. After you found so, then you enter your scalp. For instance, someone took the trade from this point, then exit at this point. It was okay for him to do scalping. So that's how to do scalping. And if you hold the trade, it depends. You hold the intraday, you hold the so this was everything was occurring during the midnight. So if you are work on our side here, East African time, then it will be great on your side. So that's it. If you find any kind of pair, you go to observe GBP USD, go to observe GBP JPY, observe gold, Bitcoin, everything was moving as price wanted to move. So these fundamentals are not there to distract the structure. They're just there to fulfill what price action did before. So you need to understand that. And this is just an head up. And I hope you enjoy the video and you understand what I'm talking about. Don't forget to subscribe, share to your friends, and everything I'll be providing for free here on YouTube channel. Thank you and enjoy.